Losers, average losers. 3 words. Losers, average losers. The market has shifted the playing field. Going the complicated route feels like the right route, but going the simple route is the way that most people won't go, but it actually is the correct. Quick disclaimer, these videos are meant for educational purposes only. Anything said or shown in any of these videos are personal opinion and my perspective. Trading carries a high level of risk, so anything done is your responsibility. Hey, how's it going? And welcome back to mentfx. As a lot of you may know, I've been sharing over the last few months, over the last videos, especially in my private mentorship, the overall context and bias of a lot of the pairs that I've been trading, mainly being the XXX JPY pairs, that being the UJ, GJ, AJ, EJ, CJ, those all pretty much move in tandem. They move like boats, right? There's a big boat and they're all kind of tugged along, and one might be the big boat, the other one might be a big boat, but they're all moving the same way. And as a lot of you may know, I discussed exactly the moves that you're seeing occur right now, where ever since the absorption of this guy here, which was a weekly SSC. So if you're brand new here, welcome. Very quickly, as an introduction to my channel, the main system I trade here is very simply based on SSC. This is simply structure, SND, which stands for supply and demand, and then confirmation. And oftentimes what we'll do is we'll use structure and SND to basically define the underlying context of a market and the underlying models that are moving that market to establish basically where is big money heading and where is it likely to head. And then what we're going to do is we're going to follow that big money through C, and this C can be a number of different things. A C, a confirm, can act as fractal structure and SNDs, which just basically means that you look for the same SSC within price. And confirm can also mean any of the things that you've learned before. So it could be something as simple as, for instance, a double bottom. That could be your confirmation. And what you're going to notice is that as you get better at trading and as you understand how actual money moves with the market, you start realizing that very, very simple techniques of confirmation that you might have learned before can be very powerful. And the only thing that's been missing is your actual ability to understand direction, right? So for instance, like looking at UJ here, as a lot of you may know, and I've shared this publicly endless amounts of times now, so you must be bored of hearing it now. I shared the fact that UJ would be bullish all week for the last few months, ever since the absorption of this low, ever since the underlying accumulation model that has played out here, ever since the 2.0 buildup of the SNDs that occurred all the way through every single one of these points here and continue to go long. We've been long since then. And since then, I believe the last time I made a video publicly was when price was around here or here. We spoke about this high being ran and how as a high gets ran, based on probabilities, based on edge, and based on the fact that we understand that we're trend followers, we never expect what we like to call the pullback. And many traders do. And already many traders are forcing the shorts here. And no matter what technique they're coming from, whether it be smart money, whether it be equal tops, double tops, take out the liquidity at the bottom, trend line, blah, 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 whatever technique your order flow, right? Dom, purchase, back, forth, flippy dicky, it doesn't matter, right? Whatever technique you're using for actual entry, if your underlying supposition is that this price, because it came through a high or because it's been too overextended, is going to go down, no matter what confirm you look for, no matter what you force onto the chart, you're going to be likely wrong because now you're heading against trend. On the other side, we spoke about the fact that this market would remain long and is very likely to remain long. Now, anytime that I say that, I don't mean like I don't come into it knowing that that's it, the market's guaranteed to deliver this way, put on the long, easy peasy, easy does it. No. When I do it, I know that there's about a 70-80% chance of the underlying being correct. And then on top of that, I know there's a percentage associated with me actually getting involved, because just because I'm correct does not mean I'm getting involved. Something that a lot of traders also need to recognize. And many people don't know this, but just because you know the direction does not mean you're going to be correct or get trades. It's something that's very important to remember. Once you understand that, you're kind of set for everything. So in the last few videos, we spoke about this high specifically, of the high being targeted by the orders in here. And as those highs got cleared, I made the video talking about the fact that we would see this likely blow up to the top side as money's going to come in and start liquidating close to anyone that is forcing the shorts by way of either smart money, imbalance fills here, SND here, imbalance fills here, SND here, SND here, by way of support resistance, right? Resistance here, resistance here, resistance here, etc. Anybody looking for this top side kind of idea of where can this market stop? Where can this market stop? You know, like we've been buying up, where can it stop? Where can it stop? Those are the exact people that are getting liquidated right now and are losing. And in many cases, because a lot of retail or a lot of dumber money and weak hands do this, as they're getting involved in these shorts, right? So there's a lot of people that have been getting involved in shorts already from back here. As they're getting involved, they're now trying to average down, which means that they're entering over and over and over again, and in some cases with more and more lots. That way, off of a smaller move back, they can secure a break even at least. So oftentimes what happens is that can work for a while. It's called a mean reverting strategy. On average, a mean reversion means that it's going to happen on average most of the time. But something that they forget to tell you is that when it doesn't occur, and when true runs begin and when true trends begin to deliver, which is more often than you think, which is why we are trend followers here at mentfx, what happens is those same people that are now averaging down, doubling up, trying to predict the top, trying to predict the top, trying to predict the top, that's exactly where those people blow their accounts and fully lose everything that they've had, because it only takes 1%, 5% of a market that does a true trend run to get rid of every other average down trader. Now, there's this funny quote that you'll hear from this guy. His name is Paul Tudor Jones. A lot of you might have heard of him. He's a renowned trader. Used basic, very technical indicator of like a 200 MA to trade. So a very, very pronounced trader. And one of his biggest quotes known to mankind, right, was losers average losers. 3 words: losers average losers. And all it really said was that those that are not true trend followers, or those that think they're trend followers but don't actually follow trend, are those that are going to lose forever. And the reason and how to push that further is when you think about it, losers average losers, all it means is that a loser, a losing trader, is someone that's going to average down, double up, get in and in and in again and again and again on losers. So the same person that thinks that UJ is finally got into the top and starts shorting it. Finally got into the top, starts shorting it. Double top, right? Finally got to the top, start shorting it. Finally got to the top, start shorting it. Finally got to the top. Look, we're making, we're diverging lower. We get lower highs. Start shorting it. Oh, it's going higher. Start shorting it. Oh, it's going higher. Start shorting it. Oh, it's going higher. Start shorting it. And yes, it can pay off and it might work. However, because losers average losers, when the inevitable trend continues, because in most cases, trends tend to continue, which is why we are trend followers, which is why when we actually look at markups, outlooks, and all this stuff, when you see me do it on this YouTube channel, every time you show up, it's not some new shit. It's not like, all right, guys, today I'm going to hit you with a brand new banger. Today, with this new one chicky flippy break that has occurred, the market has shifted the playing field. It's like, no. This has been prominent and true ever since this absorption of this low that's occurred and this initial break right here that happened. And after this break right here happened, we've been bullish on this thing since about March of 2023. And since then, we've remained bullish, have gotten position bullish, got position bullish through the 2.0s that occurred all the way up through here. And when I talk about 2.0s, it's just basically following the last chain of down moves before the up moves, down moves before the up moves, down moves before the up moves, following those up. And as we approach this high right here, which was the larger high of a 3-day SSC, very simply from that low to this high, as we approached it, we discussed the fact that a move above it would likely put in motion a significantly more bullish market that now wants to extend even higher, and the money wants to come in, right? Because the big money has gotten its chance to position. That's what we saw occur here. For people that didn't get in on these SSC moves, there are other moves that are not going to be available to you, because we understand how markets not only get accumulated or truly accumulated, right? Not just like spraying whatever the people do. How they truly get accumulated and then extend, right? And as they extend past the high, we understand that they're not extending past that high to go down, to go down, to go down. We know they're doing it to start sapping the living shit out of every seller that doesn't understand how to emotionally handle themselves and start to look at a market that is truly undergoing full accumulation and is now in what we call markup. So you guys can see how some of the terms from Wyckoff are carried over. For anyone that has studied Wyckoff, this idea of stage analysis, how in stage 1 you'll have this accumulation, stage 2 is the pronounced move that starts a true markup, right? And then that can go through multiple reaccumulations, which is what I teach you guys here, and I teach you how to spot that. One way, for instance, to spot reaccumulations is basically through this indicator in reference to higher protected lows being built up, being broken down, and then tapping into higher time frame based SSCs as part of a larger context, which is exactly what we had here. So we assume reaccumulation. We assume the stage 2 has either occurred or has just started. And as you can see, stage 2 begins to play out and you have expansion, right? And then again, the question becomes, where are we expanding to? How are we going to do this? Well, you follow the same simple thing. You follow the same higher time frame SSCs to determine where it is that prices are going to want to head to, right? So when I made a video on UJ here a few months back for you guys here publicly. So if you're brand new to my channel, make sure you watch my previous videos. It's all there. You're going to see it firsthand. None of this is hindsight or bullshit, right? And if you think it is, I don't really care. It doesn't bother me. I'm just here to teach and help out some of you guys. And those of you that are really good and get really good at this can go and get funded with mentfunding. So, I do have things to sell you. I have 2 things to sell you. One is a phenomenal community, a phenomenal Discord. That's mentfx.com. And the second is, if you have the skill set, if you don't want a community and you don't need it, right, and you just want to go and basically utilize capital, well, you have you have a ton of beautiful firms available to you. One of them being mentfunding. So I care about getting this information to you so you can go and develop your own system, so then you can go and get funded, so then I can go and make money off the profit splits that you get. It's like it's a beautiful ecosystem that we're building here. So that's why I do what I do. Nonetheless, this market has been showing bullishness for a long time. And very simply, the most recent SSE with this break from this low to this high, right, simply shown by this indicator. For those of you wondering what that indicator is, it's called the mentfx structure. I made that indicator available to the team, to everybody. It's fully free. You have access to it. Go literally into your trading view and find it. You do not have to pay me for it, right, at all. And simply created an SND at that point. Price came down, absorbed through the low, and since then, off of a lower time frame, began to put in what we would call stage 1 of the accumulation, right? You had the MB break to the top side. On the daily, you had multiple breaks to the top side. These are bullish breaks. These are showcasing to you what money is doing. Money is displacing itself to the top side after undergoing a higher time frame absorption. And now we assume price wants to make its way to this high. Now, price doesn't have to do that. Most of the time I'm correct. So, this hasn't changed. I've been talking to you guys about this for a long time. The price wants to come and take out this high. And that's exactly the prerogative and the underlying assessment of this that I've been utilizing. That I've been sharing with you guys and have been trading personally, right? So as this 3-day began to break long and the daily began to break long and the daily began to build up its 2.0s and build long, all we expect is this to continue going long. Now, due to the fact that you can see the protected lows, we've actually had a number of them built now. I would not be surprised, right, if we underwent some kind of reaccumulation. Again, what is a reaccumulation? That's very simply when you undergo something like this, right? So that's the same thing that happened like right here. We can have that happen now, right? So in the upcoming weeks, we could get a move down that makes that break down, which shifts one of these protected lows lower. And again, what's going to occur to a lot of you in your minds if a break like that occurred? Well, if a break like that occurs, most people, everyone across the board is going to start thinking shorts again, right? And the reason for that is because, hey, the structure broke down, right? The chicky broke down. The imbalance right here got filled and now it's breaking down. Look, there's equal lows where, I don't know, there's a trend line of liquidity here. There's equal lows here, right? People will force you, let's put it a different way. You will be able to force with whatever concepts you have any side of the market at any given point. If you go to the most bullish market right now, and you ask 50 traders what they think using whatever concept, insert X concepts here, SMC, insert concept order flow DOM, insert concept break and retest. If you go ahead and ask them, most people, because of how the statistics probability of the underlying trading sphere look, 70% of people are going to tell you that market is short, or it's ready for a short, it's ready for a pullback, instead of look at it and say, this is bullish. It's a lot harder to make this simple observation. So remember that. It's a lot harder for someone to make a simple observation. People want to complicate the underlying. It's hard for you to look at this and just see the fact that it's bullish and go, it's bullish, and start following it. It's a lot easier, even though it's more complex. This is a little bit of a brain fuck. It's a lot easier to look at this and go, okay, we filled the imbalance. We might come for this guy here. We're likely breaking down on a 30-minute. Let's take a look if we're breaking down on the 30-minute here. Okay, we broke some on the 30-minute. There's maybe a chicky flippy here. We're filling the imbalance of this point here. We can maybe expect a little short down into the equal lows here to maybe take out the lows right here, to maybe take out the lows right here. Maybe we'll go right to this imbalance right here, and then maybe we can look for the lows right here. People think that because their approach is more complicated and is based in more analysis, that it's correct. This is not the case. And a lot of you are going to soon, hopefully have already started to realize that this is not the case, right? It's a lot easier. So it's going the complicated route feels like the right route, but going the simple route is the way that most people won't go, but it actually is the correct, right? So this is also called by a lot of mentors the path of least resistance. This was taught from, way back in the day from the best stock traders that made millions of dollars trading. And it was basically being able to identify what we called the path of least resistance. I think it originally came from like O'Neill or something with the cup and handle. I'm not sure. Nonetheless, what it meant was that, if you saw price near a high like this one, right? Just very simple. So this is kind of what he taught. If price was near this high or this high right here, the second it's, or like this high right here as it starts running it, the second price is at that high or running it, the likelihood is that price is just bullish and is going to keep breaking and keep breaking and keep going higher, right? And then you kind of see that occur here. It's a lot harder because of how simple it is for you just to go, oh, okay. If the market's bullish, it's bullish, right? If it's breaking bullish, if it's showing bullish, it's bullish. Just going to expect it, right? It's a lot harder for you to look at a market that's up here and go, yeah, I'm going to expect that. Yeah, I'm going to expect that because that's my expectation, right? It's a lot easier, and this is why a lot of the largest spaces in the world, or the largest trading spaces in the world, get away with teaching this kind of thing because it's more, it feels more like you're doing something, right? It's hard to do, it's hard to learn, it's hard to work on the charts when you feel like you're doing nothing, but that's actually the right way to do it, right? It's easier to show up every day and everything's new, right? Imagine my videos were like this. Hey guys, welcome to mentfx. Today, price has traded into this last move right here from this random area that I found, filling in this random imbalance that has just been filled while taking out the equal highs. As it took those out, remember, it has made the overextension of a 16.2 Fibonacci line. And as it comes right into here, I'm going to check the 1 hour to ensure that the underlying is true. And oh my God, we had the chick of the flip and it's come into the zone and it's hitting down, and we're going to hit this down so we can hit back up and we can hit back down and we can go to the side and we can up and right. It's going to feel a lot more powerful. Like, yeah, I've learned all these concepts. I can make it so complicated. I am the true analysis master. But instead, sadly, so sad, you show up here to mentfx video and you get, hey guys, we've been talking about this for a while. Ever since this break here, price has been bullish. We've been expecting bullish. I still expect bullish. I hope you guys are not bored. But as we took out this high, we expected bullish. And then we expected further bullishness because people don't understand that it's a bullish market. And now the market's still bullish and I expect it to be bullish. And if it wants to break down, then I'll walk away because I know that the underlying is potentially changing and I can take a step back. But everything is still bullish. I'll see you guys in the next video. Join up with the community, right? That's basically what each of my videos are. I hope a lot of you are starting to notice this because what I do doesn't change, right? We're just utilizing very, very simple concepts to establish underlying direction, underlying buying or selling, and then assume whether we're in a stage 2 analysis or a stage 2 markup, right? The true markup, if we can start getting involved in that direction. And that's all that happens. And then we have targets established and we use those targets to anticipate whether or not there's a potent enough risk to reward if we were to enter right now to then take that higher. There's a reason that here at mentfx we grow at a slower pace than a lot of the online space of like Instagram and stuff. And I don't mind this because I love bringing true education to the forefront. And I'm not going to take a lot of time talking about that because I don't think it's worthwhile. But the main point being is that we've been bullish on this thing forever. You guys know this. I made videos publicly and privately. So any of you that are private members, please let the people know in the comments. Let them know what's up. Let them know what they're missing. But for people, even for you guys publicly, right, we've been talking about these exact moves here for months now. And I told you guys that you're going to see the run on this. And then as price was here, I told you that most people are going to likely look to short it, but price is going to start running the high and go even higher. That's exactly what price is doing. Those are the exact formulas I'm using every week, the blueprint I use to trade this price. Now, the reason I wanted to make this video is because I got a little message from a member here in my private mentorship. And again, I'm very, very active in my private mentorship. If you message me on Instagram and stuff, I'm not that active there, but I'm super active in the mentorship. He basically said, when you talk about it, because he's a little bit newer, what do you mean by looking at the order flow or the context and not structure? And that's very, very much in tandem with the learning that we're going through today, right? And it's the fact that anybody can spot structure. You're not you're not a special person for being able to see a bearish or bullish break. Anyone in the world, including my daughter, who's about, what is it? I believe 10 months old. I think she just turned 10 months old. My 10-month-old daughter can look at this market and go, there's a line here, so it broke bullish, and the structure is bullish. Anyone can do that. Similarly, let's go to UJ here on a lower time frame, because this is going to be part of today's teaching. Anyone can go, there was a break here, so we are currently in a bearish structure. Structure is not complicated. It doesn't have to be, at least. It's very simple to see it. And then you can look at the intermediary. Where's the most recent break? Right here. It's a bullish intermediary break, right? Structure is very different from context and order flow. If price and the decisions that you make behind price were as simple as wait for structure that is clearly bullish to shift quickly to the bearish side and then follow the bearish down, everyone and their mother could make money with no issue. And the only thing that would stand in the way of them making money is potentially risk management, which is still a very big aspect of trading, which, hopefully you're learning. But once you start realizing this is not how prices move, and once you start realizing that when there's an underlying bullish market, this is actually likely to do this, and there's a reason you're taking endless losses here, expecting this, which is almost never the case, basically, just to put it simply, once you realize it's not as simple as that, not only do you now have to work on your risk management, you also have to learn on your ability to understand price, to understand, what is happening with the orders in a given market. How are they moving? What are the at-hand models that are being played out? Now, we're kind of far here. We're at 20 minutes. So I know that usually by the 20-minute mark, you only have the people that are truly serious about their journeys watching this video. So now I'm going to make a little interlude for you guys. Very quickly, today is 7/5/2023, so that's July 5th. The private mentfx mentorship, which by the way is mostly sold as a community because the community aspect is amazing, but still has over 200 hours of private content and webinars every week, is about to be remastered and updated in a much, much deeper sense, in the ways where basically I'm going to teach you everything that I possibly can in as simple and as short of a time as I can as well. So if you're someone that's still here and you actually want to take your learning to the next level, 1, you should be part of this community. It's one of the best communities you're going to be part of. 2, it's about to get a rebrand and a remaster portion of the course, and I think that you guys would enjoy that, so definitely join up. It's somewhat cheap, whatever you want to call it, but it's a community that you'll never want to walk away from, so I look forward to having you there. Nonetheless, let's get back into it. So you start recognizing that structure is a very easy thing to understand, right? Structure can happen anywhere, right? It can be as simple as looking at a line break like that from an indicator, or by looking for the most recent break. But that's not going to teach you how to actually understand what the underlying buying or selling is, because guess what? Based on just that kind of thing, there's breaks every day to each side on different sides, right? And if you're just trying to sell here because that made a break, and then you're trying to sell here because that made a breakdown, or you're trying to buy here because that made a break up, notice everything feels like everything's failing. And of course it is, right? This is when you get into those issues of my zones are never working. I fucking hate this. Everything is hard. I don't know what's going on. People are telling me to trade zones, but my zones are never doing anything. What's going on? This is where that comes from. I love the failure of zones. The failure of zones in many cases just means more money coming in and potentially getting ready to absorb zones to start making bigger models play out and start true stage 2 markups that I can now be a participant of. So those are beautiful things for me. But for people that are new or are in most of the SMC space, failing zones is the most atrocious and scariest thing they've ever seen for themselves. Because again, they don't understand this understanding of order flow versus structure. Fact is, like I just said, structure can be found at any point. My 10-month-old, my little daughter, I love her so much, but she can find structure with no issue. She can go, whoa, it made a break. Oh, on a smaller time frame, look, it made this break. I can go long here. It's like, no, that's not how it works. Thank you very much. So structure is very different. Structure is just structure. Anyone can look at structure. Oftentimes you want to match structure with the actual order flow. Now the question is, how do you read structure? So what I wrote to this member is, anyone can read a break in one direction or another. It's very easy. Anyone can do it. These Instagram posts you see of these breaks, anyone can do it. You included. It's simple. It doesn't help you though, okay? But that does not mean that that's the underlying direction. So that's where the underlying comes from, right? And here, even today, this is why I wanted to make this video, because throughout this week, but it's July 4th week, so happy 4th of July for a number of you. This looks like it's about to come to break even too for me, but that's fine. what you can see is the at-hand structure is actually bearish. Right? The most recent break, from a standpoint of left to right at least, has been to the bearish side. Now, if you're someone that's doing lower, like you could say this was bullish, or if this breaks, it's now bearish, right? Or this was bearish, and now it's bearish here. Whatever it is, right? You can find breaks anywhere. Structure is structure, and that's super simple. But now the question becomes, what was the purpose of this breakdown? Was the purpose of this breakdown to start a distribution, to start going for lows and onwards and forwards to lows? Or was the purpose of this for an absorption to start going long? That's where you start getting into models, and you start moving yourself past the goalpost of what my 10-month can do, and move yourself into the goalpost of what you can start doing every day as you show up consistently, and start doing because you have the experience to judge the way that you look at things, right? So this 15-minute broke down here, but you can see I began to look for longs instantly. Why might that be? Well, as we just spoke about for a few minutes, right, prior, we've undergone a weekly. This is a weekly zone, as you remember from the weekly. I'm going to actually show you this. Here's the weekly zone that broke down through it, absorbed it, began to put in longs. Those longs were put in via a 3-day break to the top side. Super clear. Now we have a bullish break within an underlying bullish assessment of an underlying bullish market, which has been showing to us bullishness. And by the way, for any of you that, are like, fucking hindsight piece of shit, watch all my videos before you talk a little bit of shit. We've been bullish on UJ, just so you guys know, since these initial pushes right here in the private mentorship, and I believe I started making videos on UJ for you guys publicly around these points here, where I said that a break of this high, just like I've been talking about a break of this high, would result in explosive action to the top side. And that's exactly what we've seen happen. Money has come in beautifully and started to take us to the top side just with no issue. But again, during this time, losers average losers. You had endless numbers of people blow accounts and lose money, hedge funds included, banks included, right? Some of the smaller hedge funds and stuff, this is how they blow money. They average on losers like these. We spoke about this exact move, and this was part of this weekly run, which we said would establish itself into a larger push, which is exactly what it did. Wow. This was all broken down prior, without hindsight, all the fun stuff. And then ever since we've topped out and began to go down, we stepped away from this market for a little bit. So this is also an important part where you realize that just because a market's breaking down or making a bearish break in structure, just because it's making a bearish break in structure does not mean that the market's bearish, nor does it mean that you need to be trading it. During these initial breaks down, I stopped watching UJ with my team. I basically said, I'm waiting for bullish to come back in because I'm overall bullish on this thing because of what it's shown us it wants to do. The money's behind this. The way I kind of resemble this and explain to my team is that there's so much money behind this move, you can't even fathom it, right? The kind of money that had to get in behind this accumulation here and here when it happened to start this stage 2 markup, which I think we're now in and are going to continue going higher. The kind of money that had to enter this to start the stage 2 markup is taking its time getting out. It doesn't get out at once. It does not get out all at once. So as this began to break down, yeah, it could have started this and then I'd walk away from the market completely. But if it's true that the underlying money behind this move would want to continue its move and continue taking profits higher, we would see an accumulation at this S&D of the higher time frame or just under it through absorption. Lo and behold, we did not watch price throughout all these points here because we understand that we can walk away from a specific market. There are infinite markets to trade. We do not get attached to a market. If you're someone that trades a much lower time frame, that's a different story. You may get away with trading more counter trend ideas because you have smaller models to work with, and they can be switching a little bit more during the day. But there's still an underlying buying or selling that's occurring, which is why even when I traded my 1-minute system back in the day, I now trade about 15-minute or plus, 30-minute, 1 hour, even higher in some cases, right? I would usually wait for clean contexts. So we didn't touch any of this. And as price tapped into here, again, I don't care about the failure of the zone or not. The zone is sitting there to prove an SSC, not to give me a trade, right? So the zone sits here not to be validated and held and beautifully represented so I can feel good in my inside little feelings and my butterflies can flutter in my little tummy, right? I don't give a shit. It doesn't matter. All I'm sitting there waiting for is to say, okay, if money is to come in on what has been a truly accumulation push, and this is to become a reaccumulation, the only way that would happen is if we underwent stage 1 accumulation off a lower time frame within the last down move before the out move on that weekly time frame. That's it. And if that happens, you sure as hell know I'm going to be looking for my longs. Lo and behold, on the 3-day, the daily, and some other timeframes, we underwent what we call an accumulation model. That's taught in the private mentorship from webinar 100 and onwards, and will be in the remastered course as well. So we broke this high right here. We broke this high right here. We reaccumulated exactly what we expect to happen into a proper SSC, exactly what we want to see. And then we started building the 2.0s. And these are the 2.0s I shared last week, or 2 weeks ago, or 3 weeks ago in my public videos, and share every week, as you all know, in the private mentorship, because we have a webinar that's usually 1 to 2 hours every single Sunday, where I get to talk to you, to a lot of other members, and we get to start the weeks correctly, right? So again, an SSC is a blueprint for what you're waiting for, but it's not a guarantee, which is why I don't care when zones hold or not. It doesn't matter. Zone fails, blah, 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 nothing happens, and then we start getting our true shifts in nature. We start seeing the true money come in. Price steps in, builds its 2.0s, 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 and again, I made another video last week. What do we say? Just like this high back here a few months ago, years ago, when I made that video talking about how it's going to explode to the top side and then keep moving to liquidate the same dumb money that does not understand how trends move, I told you what happened here. Price would explode through it. The same dumb money that does not understand how prices move, likely, doesn't always happen, but likely are going to be liquidated all the way through these highs as they try to pinpoint highs every day. And every trader sitting there, maybe on each candle day going, okay, here I am, right? Here I go. We broke the high. Now we have this high. We have this low. If we take out the high, we're going to go for the low. Oh, took out the high. We're going to go for the low. Oh, I didn't do it. Okay, take out the high. We're going to go for the low. Oh, I didn't do it. Okay, take out the high. It's going to go for the low. Didn't do it, right? You can get this as crazy as you want. And the reason I'm showing these examples is because based on the circles that you're coming from, you're going to see how you're thinking the same way, right? You likely thought this way once before. And hopefully today we're breaking that apart. Oh shit, it made 4 candles down, right? It got under whatever lows here on a lower time frame. It broke the low. Oh my God, it's hitting the mitigation. It's going to low for this low. Why didn't it go for that low? Oh my God, it built equal lows, equal lows, equal lows. It's going to go for these lows. Why does it keep going up? Understand the underlying money. Stop trying to force shit. Keep it simple, just like I spoke about a second ago. The simple analysis is usually the correct analysis, but it's the analysis that most people can't do because it makes almost no sense in their mind to be like as simple as it's breaking bullish, it's going bullish, bullish underlying model, let's expect bullishness. It's hard to do that for most people because, you know, in some cases you spent a year, 2 years learning, and now you're being told straight up to just look at the most recent break, look at the underlying model and decide, is it worth trading this market or not? And that's it. Right, it seems almost like, what the fuck is this guy talking about? Like, this is bullshit. Okay, so as we spoke about, beautiful high, running. And this is where you got your setups on a higher time frame for those of you that are higher time frame based traders. If you're using MAs, right, you get exactly what I talk about. You get a surf of the MA and a beautiful breakout, simple as that, or very simply, you can look at breakouts based on the bet on 2 methodology. As you guys know, I teach that in the reaccumulation section of the mentorship, where basically you look at this, and again, this will be in the remastered portion too. You get sideways action and you enter on the breakout of this candle. Stop under the low, and this is a trade that you can now be in, right? You're of course managed to break even now. You're probably even taken, probably no partials yet. Probably waiting on partials, managed to break even and looking for the continuation run, right? Because again, what we teach is not actually forcing you to go and use a 1 minute time frame because again, you're trading anti-trend. What we teach is going to work across all time frames because you're looking at you're consistently looking at different time frame trends, right? Like when you're thinking about Warren Buffett and stuff, like the stuff that he does, all he's really doing, even though it's hard to understand this, right? Because he's using all the fundamentals and stuff, is he's like on a stock like Apple, right? And he's simply looking at, you could almost say a 6-month chart, right? To decide whether or not it's worth to buy something, right? So when Warren Buffett's doing his analysis way back in the day, you know, okay, what do we do, right? All I see is we're getting a bullish break, right? SSCs are moving bullish. Clearly, I'm going to wait for a clean entry. So Warren might be buying already because he doesn't care, right? He's buying with full position. He's just buying, right? He's buying basically with his SL at 0 because he likes the fundamentals, and then he's holding. And this is his trade, right? And now that's how he made his money. So all he's doing is almost just trading a higher time frame based SSC. He's just trading the trend. That's all he's doing, right? And he's finding that trend through his own knowledge of fundamentals, but I don't do fundamentals. It's useless to me. So if you understand that the SSCs are not moving bullish, what you can wait for simply is one of our setups. In my case, the bet on 2, where basically price goes, And let's make it simple. Goes, go sideways, goes. That's it. It can be that. It's also called the ICI in the mentorship, but very simply it's goes, go sideways, goes. Goes, go sideways, goes. Goes, maybe fucks off. Goes, go sideways, goes, right? This is how markets move. So that's what you can look for now. You can look for a good setup like that. So we wait, maybe see nothing still, right? Goes, go sideways, and then on an explosion up now, we can enter. So, okay, still going sideways. We're waiting for an explosion, a clean explosion, right? Just like that. And simply, right, if you're a trader with a high net worth, you throw your SL under the candle low, you look to target higher. I don't know how this goes, but okay, yeah. So in this case, it would have been great, right? And again, it looks tiny, but you're risking yourself on over, how much is this? On over $10 of risk. So you can easily enter multiple billions of dollars on this, trillions of dollars on this. And, you know, this could be your trade. And 2,000 days later, almost 8 years later, you've made a fortune from investing, right? What I teach you is synonymous across all time frames. And that's a very powerful thing because that means that you can actually scale your account and you can scale your system. You're not stuck to one time frame like a 5 second, 10 second, 1 minute because you're constantly on the wrong side of price. If you can understand the underlying principles of how price moves, accumulation, how it breaks, how it follows SSCs, how as it takes out an SSC high, it explodes and usually explodes. How when it takes out, let's go back to UJ here, how when it takes out an SSC high, it can explode and how it's likely to explode. How when it takes out an SSC high, this is the exact high we spoke about last year in my video, so please watch them if you want to have it for free and don't want to pay me. It'll explode as it has. How the next SSC high, if price can somehow get to this high, which is what I'm expecting, will likely explode into higher price action. Once you understand the underlying, you can scale your account and your strategy across the timeframes that work for you. Whether you have a job, a life, a hobby, insert, whatever it is. You can scale your system to work for you and you can personalize it in a way that makes sense to you. So you're not stuck there going, I have no idea where it's heading, right? But today it hit this imbalance. So hopefully off of my 1 minute, I can find some kind of breakdown. Did I get a break? Okay, I got a break here. I'm going to hopefully trade off of the random imbalance here. Okay, definitely entered there. Probably even got it like that. Boom, I'm ready to go. Even though this is not how you're trading, right? And again, if you try to follow that same thing anywhere here or here or here, you're losing money. So I'm trying to move you away from thinking that you need to be on these low time frames, one, but you can be. But two, I'm trying to give you a system that you can actually scale for yourself because you start understanding how underlying price moves the actual markets, right? So back to the thing, if you just understand structure, it's not helpful to you because the at-hand structure does not necessarily mean that's what you're going to be trading with, right? Because right now, remember, the at-hand structure is bearish. What kind of directional plays do you see that I made on this pair? Despite the fact that the most recent break has been bearish. They've been bullish, right? They've been extremely bullish. Every position I've had on here is bullish and they're still bullish and I'm still looking for bullishness because the underlying is still showing that's what it wants to do. And the reason for that is because, if we go to a higher time from now, we're delivering beautifully to the bullish side. Remember, the simple approach, the simple analysis is usually the correct one. Everything is showing increasing protected lows. On average, that means we're heading higher. It can be wrong, but on average, that means it's heading higher, right? Increasing protected lows, on average, believe it's heading higher, and it does. Increasing protected lows, on average, believe it's heading higher, and it does. Increasing protected lows, on average, it's going to head higher, and it does. Increasing protected lows, it breaks, on average, it's going to go higher, and it does. Increasing protected lows, expect to go higher. If it breaks down, right? Over and over and over again, we have a model that we use to approach the market. So every time you see me, it's not like, welcome to the new breakdown. The interest rates have come out. The red news has hit. The FOMC has shut down the motherfuckers. And now we're ready. Like, it doesn't make sense. Why would that be the case? So the underlying has never changed. So the bullish is still there. And all we did is we took this zone right here, refined it to a 15-minute. And again, this was shared in the private mentorship. And the way that we got to this exact zone and why we got to it, and this is where true imbalance or inefficiency comes in handy. This is where the unmitigated portion of the zone actually came in handy. We spoke about the fact that if price got here, we'd start following longs likely. Start of the week, beautiful tap in off of a bearish break. But what do you notice about this bearish break? Think about your left to right. The prior structure to this was bearish break, bullish break, bearish break, bearish break, bullish break, bullish break, bullish break, bearish break. For a lot of people in the mentorship, you already know what I'm doing with this, but the at-hand model is showing stage one, or also known as accumulation or distribution. And as per section 3 of the private mentorship, an accumulation distribution is a snowflake, and it is only proven by the higher time frame SSC. And in this case, the higher time frame SSC is pointing to what? What did we just talk about? Bullish, 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 bullish. The weekly is pointing to bullish. Daily, 3 days pointing to bullish. It's continuing the SSC highs of Ren, and it's not showing that that's failing anytime soon. The 4 hour is consistently putting in reaccumulations and moving higher, so we're going to expect that to continue. Prices tapped into it, so we expect what is now a stage 1 to result in a run on the protected high, even though theoretically it does. You know, most people are like, oh, it's bearish, it's got to go bearish, got to go bearish, got to go bearish, whatever they're doing. We're expecting the longs, and that's it. And if prices fail down, we simply walk away, because now we can wait for the zone that has failed. Oh gosh, we can wait for it to show us what it wants to do in regards to money either coming back in or completely becoming a pair that's not worth looking at for the meantime. So the main point of today was talking a little bit about the fact that structure is simple. Structure does not give you like this whole list. Boom, you're just a fucking genius now because you know how to find the most recent break. What gives you this genius power is being able to determine the stage you are in within a market and then to assess that across timeframes to get involved. And that way, you can build a system for yourself where your lowest time frame is a 1 hour, a 2 hour, a 4 hour, a daily, a weekly, a monthly, a 3 month. You could even be Warren Buffett with a 6 month being your lowest time frame. And yeah, it's going to take you a lot longer to get positioned, right? But if you wanted to do that, you are fucking free to do it. Personally, I don't have the funds or the capital to trade a 6 month chart like that and wait that amount of time, right? Because one trade, you could be waiting anywhere from 5 to 10 years for it to play out. Even for you to get a break even, you could be waiting at least a year or 3 years to get a break even. If that works for you, if that sounds good, if you're someone that's a high net worth individual, have multiple hundreds of millions of dollars and want to invest like that, you can. If you're not, if you're someone that wants to build your wealth, right, or wants to scale to a 1 hour as your lowest or a 4 hour as your lowest, you now have you have the tools to do that instead of being forced to be on one time frame, because you're learning how to truly follow trends. And that's more powerful than anything you're going to learn anywhere else. So again, structure is not necessarily the end all be all. If you just know structure, you're not really doing anything. But structure in context of reading markets left to right, which is what I teach on this channel, plus the actual context of it, plus multiple time frames, multi-time frame analysis, you are setting yourself up for immense success. And then very simply, if you can establish the underlying money, and you can do it through a simple lens, because remember guys, what's on my chart here is not hard. It's not crazy. Weekly zone absorbed, underlying accumulation pushed. That's what I call an absorption. Prices started doing this. That's accumulation. S&D 2.0 accumulation. Prices breaking higher through SSCs. I'm expecting the longs. That's it. And now on my lowest time frame, which at the moment is 15 or 5 minute, I'm just trading very, very basic entries through what I call the ICI methodology, or the bet on two methodology, or the MA based system. Simply price moving in a direction, crazy impulse, right? Impulse, correction, impulse. This is what I teach in the private mentorship. Or impulse, surf a moving average, go sideways, break out. Or bet on two methodology, big move, go sideways, expand, and then manage. And again, most trades are going to be, as we talk about it, either losses or break-evens or small wins. That's most of your trading. And occasionally, because you're following good rules, you will get the blow-ups. You will get the trends. You will get the true blow-ups that then just go, go, go. And that's where you will have huge increases in your equity without doing basically anything, right? Everything in between is just minor increase on equity over time. You can see here firsthand, right? A few losses, a few wins, nothing too crazy. Losses pay for the wins. Losses are necessary in your trading. Just remember that. Talk about this in the mentorship. If you do join up, watch webinar 108. Very good one in regards to this. And yeah, guys, thank you for watching. I hope this helped you. Structure is not the end all be all. Do not let it be your end all be all. If you start doing that, you're going to get fucked. Disconnect from a bunch of the Instagram bullshit. Focus on the at hand model or the at hand order flow. Keep it simple. Oftentimes the simple answer is actually the correct one. And go get funded with mentfunding. Thank you guys so much for watching. I hope this video helped out. Leave a little comment below, and I look forward to seeing you again. Mwah. Peace, guys.